sideways. That's our topic for today's Backstage Pass. Well, hey there, friends. Hope you're having a great day today as we move into the noon session out of the morning trading sessions. Well, stocks are up so far today. Mortgage bonds are down. They're down about 20 basis points. The 10-year yield is up about 7 basis points and trading at about 3.47%. And like we talked about yesterday, both mortgage bonds and the 10-year yield, they're holding that 100-day moving average, kind of towing that line. And well, as a result, yesterday, the national average for a conventional 30-year fixed rate mortgage, well, it came down to about 6.29% yesterday, about what we thought. And today, based on market movements, well, we're expecting it to go back up a little bit. And listen, this vacillation that we're seeing in the bond market and with mortgage rates, well, this is what we call sideways trading or range finding. And typically what happens is that markets will move in a direction without any intervention, such as news or events. Markets will generally trend in the same direction until they hit some kind of technical level, either a moving average or a Fibonacci level. Then they'll bounce off of that technical level or maybe even ride that technical level. So that's kind of what we're seeing right now is just this sideways trading. And as a result, well, in mortgage rates, we're seeing that mortgage rates are kind of bouncing between, let's say, 6.29% and 6.39%. So one day they're at 6.29, the next day they're at 6.39. That's based off of that vacillation and, just what's going on, that range finding or sideways trading in the bond market. Now, the status quo, the thing that's going to adjust the status quo, well, that's, you may have guessed it, that's the CPI data and the Fed meeting that's going to occur next week. Now, tomorrow we do get PPI data. It's a wholesale measure of inflation. That could have some effects on the markets. And to be honest, for the 10-year yield is right at a floor of support for the 100-day moving average. Some PPI data that's favorable for inflation could push the 10-year yield below that. Not sure if that's going to happen, but that does have the potential to push that below that. And there's a lot of room down below that, which would be good for mortgage rates. But look, today has not been completely without news. There's been a couple of news items that we got out today. First of all, in the automobile market is very interest rate sensitive. And so we got some data from Manheim for the month of November. And this showed that used car prices for the month of November fell by 0.3%. And year over year, they're down 14.2%. This is deflationary type numbers. This is a very, very encouraging for inflation numbers. And we expect some of these movements in the automobile market to come through in the inflation numbers, possibly in the later numbers, maybe even in the CPI data that we get next week. And then we also got initial jobless claims. So this measures individuals filing for jobless claims for the first time. Initial jobless claims for last week, well, that came in at 230,000. 230,000 people file for unemployment. Now, that is up from the previous report, but right in line with expectations. However, continuing claims, well, that was up over 60,000 and came in about 1.671 million. That's the highest number that we've seen since February. Now, that is all the news that we have for today. Again, PPI comes out tomorrow, and we will bring that to you when it comes and also let you know how the markets are reacting. But until then, remember, stay positive, have a great day, and we'll see you tomorrow.